Okay, good evening. Today we are moving on with our second chapter, need assessment. We are almost at the end of it. Last two topics we are discussing. The heading we're discussing right now is recommend the most viable option. You see, to give you a brief, in need assessment we started with identification of the problem. Then we covered assess current state of the organization, in which we had a number of steps. Then we talked about uh, the recommended action to address business needs. Last topic was this one, the recommended action to address the business needs. And now we are talking about recommend the most viable option. And after that, we have the business case, assemble the business case. Now, this is the step where we are going to do the cost benefit analysis. We have been saying earlier that cost benefit analysis of all the options is not required to be done, because this is a detailed effort. It costs money, it requires effort. Therefore, we did not do the cost benefit analysis of other options. Rather, we dealt with them qualitatively. So, to recommend the most viable option, after examining all your potential options which you have prepared in the last step for addressing the business need, business analyst needs to recommend the most viable option. And that is, we understand that we did all that exercise as if we can reach the most viable option. Assuming that more than one option remains viable after feasibility analysis, the business analyst should recommend the most feasible option. This I told you in the last lecture also, that it might be possible we have got 5 options. Out of those 5 options, 2 might be rejected as being not feasible. The remaining 2 or 3 options, which are all feasible, we are now supposed to select the most feasible option. If only one option is judged to be feasible, that option is in most cases would be recommended. But if there are other options, then you have to select the best one. When there is no viable option, that is also one of the cases, that none of the options out of 5 came out as a viable option to address the need. One option is to recommend that nothing be done. So, if nothing is viable, we should not be going for a non-viable option. We should not be recommending that. So, ultimately, we have to recommend one out of the feasible options. When faced with 2 or more feasible options for solution, the remaining choices can be rank ordered based on how well each one meets the business need. So we must have some kind of criteria on which we can allocate some weighted marks for each of the viable options, and then whichever scores the best would be selected. For example, when an organization is re-engineering its operations as opposed to outsourcing it, these 2 options can be ranked according to how well each one solves the business problem and contributes to business objective. So whichever is better must be selected. Now, what is this weighted ranking system? Broadly speaking, this is what are the elements more important for you to judge. You earmark those factors and then rank each option according to those factors, give them marks maybe from 1 to 10 or whatever. Ranking 2 or more options can be done using various techniques. A practical and effective method is to use a weighted ranking matrix or a table. This combines pair matching with weighted criteria to add objectivity to your recommendation. Pair matching is performed by taking each option and comparing it one by one to all other options, and then voting or ranking which option is the most preferred one. So weighted average is also useful to test an initial or intuitive choice against other options. The criteria used for ranking should align with the goals and objectives identified earlier in the needs assessment. Okay, so what do you understand about this pairing thing, pair matching? Do you understand? I have three options. Yes, please. How would you pair?
Yes, sir. What I understood, there are basically three scenarios.
Hmm,
The one is we have got multiple options for the multiple projects approved.
okay.
The other one is no case comes for as a proposal or proposition of the solution.
Hmm,
And the third one is we need to wait it out.
right. Now, once we have more than one options which are viable, then you have to pick the best. And one of the methods is weighted ranking. In weighted ranking, one way of doing it is by pair matching. How do you pair match three viable options? If I asked you to pair match three options, how would you do it? Let me read it again for you as if it becomes clearer. Pair matching is performed by taking each option and comparing it one by one to all other options, right? You pick up one option, you compare
Yes.
it with the second option, then, then you vote which one is better, the one in your hand or one on the table. So say one on the table, then you compare one on the table with the third option and see which one is better. If in hand is better, that means out of the three, pair matching has resulted in the second option.
Okay. So this is one is the comparison, pairing, right?
Comparison, one by one comparison. This is called pair matching. We can do it in another way.
Okay, sir.
We can do it in another way, pair matching. If I have 5 factors, I will compare each factor of any two options. Whichever option is the winner, I will take it to the next level with the third option. So whichever wins is the best option.
Okay.
Weighted ranking is also useful to test an initial or intuitive choice against other options. The criteria used for ranking should align with the goals and objectives. So the criteria or the factors you have chosen should not be taken out of the blue. They should be related to and they should be aligned with the goals and objectives identified earlier in the need assessment. Why are we doing it? So you just can't take another criteria for weighted ranking. The same goals and objectives must be depicted in this weighted ranking system. So all the factors I have talked about, you will pick up. So those factors should be to ensure that the goals and objectives are being taken care of.
Okay.
The basic approach is to select weighted criteria for each item to be ranked. Each option is ranked by voting on it against every other option, one at a time. Scores for each alternative are multiplied by the weights and added to arrive at the score for each option and the overall ranking. Guidelines for constructing and using a weighted ranking table are. So before I can read into them, do you understand the point? Weighted average, how do we take a weighted ranking? As I said, I have 5 different factors to
Yes, sir.
assess. I say the first factor is most important, so I'll give it 3 times the weightage. The second and third factor are prioritized as number 2, so maybe I give it 2 times the weightage, and remaining 2 factors I give 1 times the weightage. So the score of this option for the first factor is say 3. So 3 will be multiplied by 3 times the factor, so 3 multiplied by 3. So we have got 9. Then the other option, we score 1. Second, not the option, second factor, I score 1. 1 will be multiplied by 2 because it has 2 times the weightage. Third factor scores 3. It is also 2 times the weightage. So 3 into 2, 6. Last two options, for last two factors, fourth factor scores 6. We will take 6 because it is 1 times the weightage, and fifth factor weighs 1. Scores 1. So I'll give it 1 point. If I add all of these points, they will give me the weighted comparison. So 9 plus 2, 11, plus 7, 17, plus 6, 23, plus 1, 24. 24 is the score of option 1. Option 2, let us say it scores 2 points in the first factor. So 2 into 3 is 6. 3 points in the second factor. 3 into 2 is 6. 4 points in the third factor. 4 into 8. And 5 points in the fourth factor. And 3 points in the fifth factor. Total comes out to be 6, 6, 12, plus 8, 20, plus 5, 25, plus 3, 28. So first option score was 24. Second option score is 28. So in this case, the second option wins. Now if I have yet another option, I will compare the third option with the second option. So the option 3 score, maybe I give it 7 points, 7 into 3, 21. I give to the second factor, I give 5 points, 5 into 2, 10. Third factor, it gets 2 points, 2 into 2, 4.
What you are giving me the example is from the table 2.5, right?
Yes.
Ranking metrics example.
Yes, yes. I'm creating this problem.
Okay, fine. No.
Fourth factor may be 2 and fifth factor 3. Comes out to be 35, 37, 40. So option 3 gets the highest score, so it wins.
Okay. So the final rank, whichever the value is higher in the final rank, that is the winning situation.
Exactly. But the important thing is the factors you have put in. Each factor must have a weightage attached to it. Whatever score it gets multiplied by the weightage. And once all the scores have been calculated, we sum them all up, and as in this example you can see, we sum it all up to get the total value. And once you have different values in front of you, you can give it final ranking 1, 2, 3, and this is how we can do it.
Okay.
So if you want to read it out, it says include between 3 and 9 criteria as a practical range for the number of criteria. You see, this is your will and wish. This does not really matter, but if you can apply these rules, like it says score from 0 to 1.0, that is all right, but whatever way you calculate it, you will get a ranking. So if you do it according to them, it says assign weights by either percentage or decimal. It is usually preferred if the weights add up to 100% or 1.0. Both ways it is okay. meaning I have 5 factors. So if I give it different percentages, so that percentage should add up to 100%. So 5 factors, I say 40% weightage to the first factor, 20% to the second factor, 10% to the third factor, and so on and so forth. But the total can be 100. But remember, even if it is not 100, that does not matter. Your score will still be okay. But this is a preferred approach, that either the sum of all the weightages be 100% or will be equal to 1 and the same thing.
Okay.
So determine how voting will be conducted. Voting for each compared pair of alternatives can be done with a simple majority rule. Another alternative is to record the number of stakeholders who vote for each pairing. The method provides 1 vote per person instead of 1 vote for the winner of the pairing. Teams may prefer to provide the stakeholders who have more authority in the organization and more votes. For example, a sponsor might receive 2 votes, everyone else receives 1 vote. So you can do the weighting in the sponsors from whom you are gathering the data, who are voting for it. You can allocate them more votes because he is more important. So you could do it anyways. It can be done according to the stakeholders. It could be done according to the factors or whatever. But you have to define a mechanism, a method before doing that. Check to ensure that the results make sense to the voters, since unrealistic results will not be helpful. Options that score excessively high or low could indicate skewed results or could indicate that one option is the clear favorite. Ask stakeholders for their subjective responses to the voting outcome. If the results are not trusted by the team, it usually means that the criteria, weights, or the voting method need to be refined. So the good way would be, once you have done the voting, once you have selected the options, if you find that there is a large difference between the selected option and other options, that means either that is the best option or there is favoritism going on, some kind of favoritism, some kind of result is being skewed. So to satisfy that, you should get back to your stakeholders and ask them their opinion about the results of the polling or voting. If they generally show satisfaction, then it is all right. If they have serious objections, then that means that the weightage or the criteria you have allocated might not be fair. So you may like to adjust that and get the voting done again. Got my point?
Yes, sir.
So although this is a very simple thing, probably you could understand this thing by your own self. Rather, you have been doing this thing all your life. Maybe in your daily life, office working, you might have built consensus this way. But there are certain things which were important here. Like you see, there should be a method already described. Everybody should know which mechanism or method we are using, how we are scoring, how are we giving the weightage, and even after having done all that, at the end of the day, we are confirming it from the stakeholders if they are satisfied with the result of the voting. And if they are not satisfied, we are ready to revise the mechanism and do the voting again. So that is transparency and fairness. So here is an example which it has given 30% weightage to increase revenue. These were the factors I was calling. They are also called criteria. So you establish the criteria. I said I will rank all the 3 options according to these 3 criteria or factors. The first criteria, increased revenue, is weighted 30%, R 0.3. Decreased claims is weighted 40%, R 0.4. Ease of implementation is weighted 20%, R 0.2. So the sum of all of these weightages, 0.3, 0.4 and 0.2, and then cost also is 0.1. So this sums up to 100% R 1.0. Now let us see what is the score of XYZ software package. That is 1. 1 will be multiplied by 0.3, comes out to be 0.3. Second option 2. So first I was only comparing first and second option, therefore we get the score for these things, and the clear winner is our first option.
One.
Sorry,
Yes, so
1 exactly. So 0.6 and 0.8, 1.4, and 0.4, 0.3, 1.1, right. So then I compare it with the third option and see that is the lowest. So ultimately I give them ranking, first, second and third. So and the same method of weighted ranking you might have used in project management also, because project manager also does that. So what is the collaboration
yes,
point here? When constructing a weighted ranking matrix, the business analyst should consult with the sponsor of the need assessment to determine which stakeholders to include in the voting process. Stakeholders who are voting should be consulted about which criteria and weightage to use. Likewise, decisions regarding the weighting method system and the weights require collaboration with the stakeholders. So while we are doing this, we are not actually collaborating with the project manager, because project manager do not exist at this point. So we are collaborating with the stakeholders because we are getting the data from them. This is not the will and wish of the business analyst to set the criteria, but it is in collaboration with the stakeholder that this criteria is set and agreed, and then the voting is done, and ultimately whatever the result of this weighted ranking, it is also confirmed from the stakeholders once again after the results have been created. So after
okay,
we have done that, the last step of need assessment is conduct cost benefit analysis for recommended option. Now this is not something new. You have already covered cost benefit analysis in project management, and this is exactly the same thing. I'll get to that. Before recommending a preferred option, a cost benefit analysis should be performed. The expected project benefits and costs need to be articulated in greater detail during a cost benefit analysis than during a feasibility analysis. So feasibility was not the detailed study. Now when you have selected the best option, you do a thorough cost benefit analysis. Whatever you think would be spent in implementing that option, the investment on that option is your cost, and whatever you are going to reap out of it is your benefit. The earlier estimates performed during the feasibility analysis are now replaced with rough order of magnitude estimates of cost, benefit and cost. If the business case is accepted and a project is initiated, these estimates will be used during project initiation. So just imagine what kind of estimates were there in the feasibility analysis that they were not even as accurate as rough order of magnitude. Rough order of magnitude is, even this is not an accurate estimate. So feasibility analysis was purely based on the qualitative analysis, and therefore that was not reliable at all. Now we are doing it only for the selected option, and whatever the figures will come out, though they will not be true exactly, but they are this is the first time we are going into that much detail. So this is called rough order of magnitude. If the business case is accepted and a project is initiated, these estimates will be used during project initiation. Organizations often have standards that dictate when and how to perform a cost-benefit analysis, including which financial valuation methods to employ. There are various methods. Which method do you want to use? Organization may recommend that. But we already know there are a number of methods, and we could choose if it is not already told to us. Depending on the organization, consult with a financial analyst or a respective representative from finance to prepare the cost benefit analysis to support the business case work. Most common valuation techniques are briefly described here, and the recommendation should contain at least one of them. And what are they? These are the methods you already know. Let me do it in a sequential manner. There is one method which is missing from here, which is called net profit. Do you remember what is net profit?
Yes, sir. How much profit is coming out of that project?
Okay. Let me give you another example from here, and then you will have a better understanding of that thing. Just give me some time. I'll get that thing out.
Sure, sure.
Because I just wanted that this should be properly understood. Although I know that you know it because you have studied it already. Okay. Okay. When you can see the slide, tell me.
Okay.
Right. So you can see here, although this is from project management, just consider these are not project 1, 2, 3, 4. They are option 1, option 2, option 3, option 4. So
Okay.
these are the various estimates we have calculated. If we are taking project option 1, the investment is 100,000. Because it is investment, this is the cost, so I am showing it in minus.
Okay.
After 1 year, it is my projection, it is my cash flow that I will be having a revenue of 10,000. After 2 years, another
Okay.
10,000. After 3 years, third year, at the end of third year, another 10,000. And of fourth year, 20,000. And end of fifth year, 100,000. So all the amounts coming to us are 10, 10, 10, 20, and 100. So it comes out to be 150. So whatever I have received is 150. Whatever I have spent is 100. So I am
Okay.
in a profit of how much?
50,000.
50,000 is my net profit. So this is
Yes.
simply adding up all the amounts, showing negative as the cost and positive as the revenues. It is very much possible that you might be investing something in second year or fourth year, so that amount would also be shown as negative. But in the example given, you have investment made only in the beginning, and then you start reaping the results over 5-year period. So all the four options, you could have done this calculation and then compared it. Whichever is the best, you will pick it up. So option 2 seems to be the best, isn't it?
Yes, sir.
So this is called net profit. Net profit is simply sum of all the benefits minus sum of all the costs. Sigma benefit minus sigma cost is your net
Oh,
profit. So according to the net profit, option 2 seems to be the best. But why net profit was not shown in business analysis? Because this is the worst method. This is, you can say, the most inaccurate method. Why? Because it is not taking into account many factors. What do you think? Out of these four options, is it the judicious decision to select project 2
no,
based on net profit?
no, sir. The reason behind to it is basically the cost, the day zero cost, which has been mentioned over here, is purely on assumption. So
No, no,
there could be a very
everything
much
is
high
on.
variance in everything.
Adil, all the cash flows are on assumption. Everything is on assumption, right?
Okay.
So that is not a valid objection. If everything is on objection, on cash flows, all are being assumed. But the thing is, whatever is assumed, which is the best project out of them?
Sir, then I have no good reason to say no.
Okay, okay, I'll give you a reason to say no. Tell me, you are investing 1 million in project 2, 1 million in project and getting a net profit of 100,000, which seems to be the best option. You are only investing 1/10 of that amount, 1/10 of that amount in project 1, and you are
Yes,
getting half,
you're getting 50,000.
you are getting half
How
of
about?
what project 2 is giving. So is it justified?
No.
So that is my point. It is not the simple matter of cost benefit analysis, adding everything up. Basically, we have to look at how much we are investing and how much we are getting. Simply looking at the net profit does not give us a true picture. Moreover, look at the project 1 and project 3. What do you see? Both have same investment, both have same net profit, but the revenue generation over 5 years is remarkably different.
Yes.
Can you see the pattern? In project 1,
Yes, yes, yes.
we are getting very less amounts in the beginning and very big amounts in the end. In project 3, we are consistently getting same amount throughout.
Yes.
So if somebody asks me which is better out of 1 and 3, I have no reason. I don't know, because the net profit says they are equal. So
Okay.
what do you think? Which project should you prefer? 1 or 3?
So I'll go with project 1.
Okay. You uh, imagine yourself doing a business. You have invested 100,000 rupees. At the end of the year,
Yes.
you are only getting 10,000. You invest in another business, 100,000 rupees. At the end of first year, you get 30,000 rupees. Which is better?
Sir, but again, if I come to the 5 years, on the fifth year, it start giving me the output of 100,000, whereas the project 3 is giving me 30,000.
30,000.
So if I
The net,
take the
net,
difference of each year,
hmm, net profit.
if I take the difference of each year,
Hmm.
So it's a difference of 20,000. So which I personally feel that on the fifth year it is going to well for the good 4 years
Mm,
the profit ratio of project 3 is high, right? But on the fifth year and fifth year onwards, the
mm.
project profit of project 1 will go high. Now my objective is if I have to keep my business up to for 10 years or 15 years, then the project 1 is a good option. But if
Okay.
let's say if I have a let's say cable network or anything, some small business,
Mm.
and I have a plan to sustain with the business for good 5 years, then project 3 is good for me.
Okay. If your business had to run for 10, 15, or 20, 25 years, then your cash flows would have shown that. Your cash flows show the life of your business to be only 5 years.
Okay.
So you should not think beyond that.
Okay, sir.
So in that case, uh, project 1 is not a good option.
All right.
Now, okay, I'll give you another parameter. The business which gets me the money earlier, gets me more money earlier, that is more suitable for me. I'll justify
Yes.
that a little later, but that is more suitable for me. Like look at project 4, it is giving me 30,000 every month, every year, but in the last year it gave me 75, right? So
Yes.
just remember this picture and then let me explain. These are the various methods: net profit, payback period, return on investment, NPV, net present value, and internal rate of return. So we talked about the net profit and we had these values, and out of these values we had objections on project 2 that though it is high but the investment is too high, which is not catered in net profit. And number 2, project 1 and 2 look similar in results, but they should not be similar. So based on these objections, let us see the next method, which is payback period. If my concern is to go for that business or that project or that option which gets my investment back as soon as possible, this is called payback period. I have invested 100,000 in project 1. When will this 100,000 be recovered? First year only 10,000 recovered. Second year another 10,000. Even 4 years we have recovered only 50,000. It is down in the fifth year that I will be able to recover all of the 100,000 rupees. Similarly, project 2 investment is 10 lakh and I am getting 22 lakh per year, and the last year is giving me 3 lakh. So 4 years I have not recovered my whole money. That would be in the fifth year, later part of the fifth year, that I would have recovered that money. Let's look at project 3.
Okay.
It is recovering all my money in 3.33 years. 1 lakh is being recovered 30,000 per year. So one third into the fourth year, I will have recovered all the money. Whereas project 4 takes complete 4 years. So if I look at it from payback period point of view, the least payback period is of project 3. Why should I be thinking about it? Why should I be talking about the payback period? If the investment I am making in this project or this business or this option is the money I have borrowed from a bank or someone else, and naturally I am paying interest on that, and it is highly recommended that I return whole of the loan as soon as possible, as if I do not have to pay that much of interest, and I should be free of loan ultimately. So whichever project, if I have taken loan, so my priority would be to go for a payback period. Whichever project pays me back the earliest, that is the most feasible project for me. Because at the end of that period, I will own the business, although it may not be making a lot of profit, but it will be my business. I do not have to pay back to anyone. And then later on, I can keep earning whatever that project will be giving me. Did you get this point? Payback period?
Yes, sir. Yes, sir.
And I'm fully aware and I understand that you already know these methods. पता है ना?
Yes, sir. जी जी सर बिल्कुल पता है बट काफी पहले पढ़ा था इसलिए थोड़ा सा रिफ्रेश हो जाएगा.
Okay, okay. Then there is another method which is called return on investment. This is a very common method. This is used everywhere. For anything you say, what is the ROI of this project or this assignment or this work? What is the ROI? ROI is the return on investment. That is the money I am investing, how much I am getting back. Return on investment, how much I am getting back in percentage. In percentage. This is also called accounting rate of return. Right? So,
yes,
taking the same example, in project 1, if my net profit was 50,000 and my investment was 100,000, then what is the yearly profit? What is the yearly profit? Total net profit is 50,000. There are 5 years. What is the yearly profit?
yeah.
Ji?
10%. 10%.
10,000. Wonderful. And I have invested how much?
100 million or 120 million.
100,000.
100,000.
So what is 10,000 in ratio with 100,000? How much percentage is it?
10%.
It is 10%. So 10% is my ROI. This is my return on investment. So I have taken the average annual profit and divided it by the total investment and multiplied by 100. That gives me the ROI. So after calculating the ROI for all the 4 options, I see project 1, option 1 is 10%, option 2 is 2%, option 3 is 10%, and option 4 is 12.5%. So from ROI point of view, project 4 seems to be the best. And project 2, which from net profit point of view was the best, is the worst in ROI. Why? Because ROI is taking into effect the total investment you have put into this work. And this is a huge investment. 10 lakh is a huge investment. And as compared to 10 lakh, that 1,000 is hardly 2%. 2% of the average annual profit. Got it? ये दिल ये समझ आ गई बात?
जी जी सर आगे असल में बीच में की आवाज कट रही थी इसलिए मैं समझा आपको पूछ रहा हूँ.
अच्छा अच्छा ओके. सो ये तो हो गया रिटर्न ऑन इन्वेस्टमेंट एंड दिस वाज comparatively simple. You can remember this formula. Otherwise, basically, this is nothing to remember. This is, you can always do it by yourself. You don't have to apply any formula. But if you want to remember the formula, so average annual profit divided by the total investment into 100.
Right.
Okay, now the things are going to get interested. Net present value. Before you can understand that, let us first talk about what is compound interest. Do you understand what is compound interest?
Uh, no, sir.
What is interest?
Plus, it's an additional money to your principal amount.
Okay, right. Although this is not very Islamic, but this is the way of business worldwide, that if you give loan to someone, you have to pay some additional amount. That person has to pay you
Okay.
some additional amount on top of your capital. So that additional
Yes.
amount is called interest. And that is normally calculated on the yearly basis. So if you say, if I put 100,000 rupees in a bank at the rate of 10,000, sorry, at a rate of 10%, so my money will be increased by 10% by the end of 1 year. So every year I will get 10% added to my amount. This is called simple interest. Every year 10,000 rupees will add to my amount if I do not touch the money. If the money keep lying there in the bank, then every year 10,000 rupees will be added to it. Got it?
Yeah.
Okay. If you are dealing with a simple interest, then it will only be 10%, 10,000. Now that means there are many schemes in the banks. You can go and see. They would say that you can take your interest away, but you cannot take the capital amount. So you can write a check and the 10,000 profit you have made, you can take it out of your account and spend it. But the 1 lakh rupees, the 100,000 rupees, which is lying in bank, must remain lying in the bank. As if next year it should give you 10,000 more. So that is simple interest. So in this kind of account, if you do not take away your 10,000 rupees, then those 10,000 rupees will just keep lying in the bank and no interest will apply on them. Right? So by the end of 1 year,
Right.
I will have 1,10,000. If that 1,10,000 whole amount I leave in the account, next year another 10,000 will be added. It will become 2,000, 2,20,000. Third year it will become,
So,
1,20,000. Third year it will be 1,30,000 and so on.
so, sir, my question is that if I'm not taking my interest, if I'm not withdrawing it, then
Right.
the interest calculation should be on the principal amount plus interest amount, right?
Exactly. That is the point.
For the
But
next whole year.
I have mentioned it is a simple interest. It is not compound interest. So you must read
Okay.
the bank conditions. You must
Okay.
go for compound interest. The thing you are saying is about compound interest. If
Okay.
I do not take my money away, then the money which is lying in the bank, whole of the money which is lying in the bank for the whole year will give me 10% on the whole amount. So normally the compound accounts, compound interest accounts, you cannot withdraw any money at all. You have deposited 1 lakh in the first year and then you go to sleep. After 1 year, it will become 1,10,000. After 1 year, another 1 year, it will become how much?
3,000 for 3 lakh, 4 lakh.
How much? 1 lakh?
Incremental value of each year, no?
Compounded value. What is the compounded value for second year?
Compounded value, sir, it will be 1 lakh the principal amount plus the interest 10,000. So 1 lakh 10,000 plus 10,000. So it will be 1 lakh 20,000.
20,000, are you sure about it? Will it not? I am saying now I am talking about compound interest. Will it not apply to 1 lakh 10,000? The 10% will not apply to 1 lakh 10,000. Why not?
My calculation 10% will be applied to 1 lakh 10,000, not on the 1 lakh.
Exactly. So what does
Right.
that come out to be?
It's 1 lakh 10,000. 1,00,000 पे अगर मैं 10% निकालूं तो should I do the proper calculation? Sir, it's a 10% of 1 lakh 10,000. That's it.
What it is, I am asking you that.
Okay, okay, sir. 8,000, 10,000 lakh into 0.1. 11,000.
11,000. So what was in the bank?
Yes.
What was in the bank? Lying in the bank?
So your voice is.
Okay, just tell me.
It's 1 lakh 10,000 lying in the bank. We've got the profit of 11,000.
What is the total amount in the bank now?
1 lakh 10,000.
Added to the profit.
Sir, I'm lost somewhere.
No, you are right, but you are not.
Added to the profit. So now 1 lakh 20.
1 lakh 20.
Yeah, 1 lakh 21,000.
Exactly. You see, this is the compounded interest of
1,000.
1 lakh 21,000 is the compounded interest of second year. Compounded interest added to the amount.
Okay.
So, okay, I'll give you very, very simple method.
Okay.
There is a bundle of 1 lakh lying, and after 1 year, it has given you a small bundle of 10,000. Now, these two bundles, one of 1 lakh and one of 10,000, is lying for one whole year. The 1 lakh bundle gave you another small bundle of 10,000, and the 10,000 bundle which kept lying gave you 1,000 rupees extra. So now what is there? A big bundle of 1 lakh, two bundles of 10,000, and a note of 1,000 rupee. It comes out to be 1,21,000. Now if this amount keeps lying there, listen to me very carefully. If all these amounts keep lying there, 1 lakh will give another 10,000. So now I have three bundles of 10,000. And the 20,000, the old two bundles of 10,000 will each give 1,000. So 2,000 is coming from there. And the 1,000 rupee will be giving 100. So add everything, it comes out to be 1,33,100 rupees. So this is the compounded interest included in your amount by the end of third year.
Sir, it will be 1,32,100.
1,32,100 exactly. So you see, your money keeps increasing.
Yes.
Right? So remember this formula for calculating the future value, and the formula is let me write it down. Formula is future value is equal to present value multiplied by 1 plus interest rate raised to the power number of years. Do you get the joke? The planned present value is 1 lakh rupees, and
Yes.
this value of I, this I is 10%. 10% means 10 by 100. Is it so?
Okay.
10 by
Yes.
100 means 0.1. 1 plus 0.1 is 1.1. 1 plus
Yes.
0.1, 1.1 raised to the power number of years. So if it is second year, 1.1 raised to the power 2 is 1.21. 1.21 multiplied by plan value is 1,21,000. If it is 1.1 is raised to the power 3, it will give you 1,32,100 rupees. The
Okay.
present value remains 100,000 and the future value is calculated. You just put the number of years here. 3 years, 5 years, 10 years, whatever. So one thing we have learned that the present value of money today is less than the future value of the money tomorrow. Do you agree with this?
Yes.
So today's 100,000 rupees means 1 year later is 110,000 rupees. So present value is less and future value is higher. Agreed?
Yes.
Okay.
But sir, the monetary value of that money is less, right? See, where I'm getting a bit confused.
Okay.
Today I'm investing 1,000 in any business.
Okay.
So in future, its value it will not remain the same. It's somewhere around 80,000,
Okay.
right?
The value will go
Or
up. Value
more
will
towards.
go up.
So aren't we are not we taking this point into this consideration?
Yes, we are. You see, this is, we are without putting in any effort due to inflation or other factors, the value of money will go up, right?
Okay.
So if you are doing a business, it should earn more than this,
So
much more than this to cater for this gap. Okay. So if you can somehow reverse this formula, PV is equal to future value divided by 1 plus,
divided by 1 plus I.
we call it or raised to the power t. Okay, why I am saying that? First of all, you understand that I have reversed the formula. PV I am trying to find,
Yes.
that is future value divided by something, right? Now let me explain
Okay.
why I am doing that. If I promise you that I'll give you 1 lakh rupees after 2 years, what is the worth of 1 lakh rupee
Okay.
today?
It's correct, sir. As of today, it's 1 lakh.
It is what it is?
1 lakh.
No, sir. That is the problem. If I put 1 lakh rupees, okay, let's not go to 2 years. If I put 1 lakh rupee today, after 1 year it will become 1 lakh 10,000. Got it? So if somebody promises
Yes.
that he will give 1 lakh after 1 year, that means the amount today should be less.
Sir, I cannot hear you properly.
Okay.
Sir,
I am saying that if someone promises that he will give you 100,000 rupees after 1 year, and what is the worth of that money today? It should be less.
yes, it will be less.
Because if I put 100,000 rupees in bank today, it becomes 120 after 1 year. So this man is promising me money after 1 year. So what is it worth now? Can you calculate the worth of that 100,000 rupees today at the 10% rate?
Yes, yes, sir.
What it is?
With the formula of this PV present value.
Okay, if you want to use the formula, use it.
Okay. So if I start putting the values in this formula, so it says that today the value is let's say 100 million, right?
100,000, 100,000. 1 lakh.
100.
1 lakh divided by
सर मैं प्रेजेंट वैल्यू निकाल रहा हूँ ना
जी जी
Right.
आप डिवाइड करना पड़ेगा ना
तो जी 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 बिल्कुल 1 प्लस आर आर में पर
1.1 है साल एक है
1 हाँ बिल्कुल 1 जी जी बिल्कुल 1.1 है और नंबर ऑफ ईयर आपने 2 बोला है उसको
नहीं 1
ठीक है सर
एक साल
अच्छा 1 ईयर कहने एक साल करने का तो इट विल बी समवॉट लाइक 1 प्लस 1.1 2.1 हो गया आपका और 2.1 so it's 47,619 almost 50,000
47,619
जी
ना ना ना
ये सर मेरा जो बेसिकली मैंने आर है मेरा जो इंटरेस्ट रेट है वो 1.1 है उसमें 1 ऐड किया है मैंने ठीक है फिर 2.1 हो गया
1 ऐड कर दिया आप
तो
1.1 में 1 क्यों ऐड किया
अच्छा अच्छा सॉरी वो तो 1.1 हाँ 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 ठीक है सॉरी मैंने वो प्लेसमेंट करते ठीक है ओके तो ये डिवाइड बाय 90,000
90
90,000 90,000
ना ये मैं
90909
exactly that is the point it is almost like 91,000 90,900 and something
yes
so
yes 91,000
normally people do the mistake they say 100,000 minus 10%. So they say 90,000. 90,000 is the wrong answer. Actually, the amount is 90,910 rupees. Got it?
yes
So basically,
yes sir
this net present value thing is finding the present value of future money. And this is exactly the reverse of compound interest. Got
okay
it? The only difference
yes sir
is that when you calculate forward into the future, you apply interest rate. When you calculate backward from the future, the interest rate, the percentage is not called interest rate. In backward calculation, it is called discount rate.
okay
Got it?
so can you please no can you please repeat this one
Okay, I'll repeat. If you are calculating from present value to future value, like the first formula, you are trying to find the future value
yes
of your money, you will apply interest in it, interest rate. So value of I will be used.
okay
But if you are calculating backwards from the future, today value you want to find, then it is called discount rate, because then it is reverse of interest. It is called discount rate.
Okay.
And both
Yes, sir.
these percentages, ये कहाँ से आती हैं ये percentages? Who allocates this interest rate and discount rate?
बैंक बता दो.
Bank बताता है. Rather, State Bank of Pakistan tells all the banks that what is the discount rate and what is the interest rate. They are not the same. There is small little difference. 1-2% का दोनों के दरमियान होता है. ये क्यों होता है? This is the business of banking. Bank takes your money and pays you some interest. Then bank gives your money to someone else as a loan and gets interest on that. And out of that interest, it is giving you your interest. Got it? If the interest rate and discount rate are equal, then bank is not making anything. The difference between interest rate and discount rate is the income of the bank. So he will charge more. He will charge more interest to the people who are taking loan from the bank, and those who are depositing their money into the bank, they will get less. Got it?
Yes, sir.
This is the difference between interest rate and discount rate. So forward calculation, interest rate; backward calculation, discount rate. Discount rate we show with R, and interest rate we show with I. And number of years can be shown as NRT, one and the same thing. Number of years has no problem. Okay, now you have understood this formula?
Yes, sir.
Okay, can I write that present value is equal to future value? Let me say present value is equal to future value multiplied by 1 divided by 1 plus R raised to the power D. Any objections to this?
Sorry, so I was writing your statement where you have written what PV equals to FP
Is the bottom.
to 1 divided by okay.
Is it the same thing? Is it the same thing?
PV.
वही बात है ना?
Yes, it's the same. बिल्कुल सभी बात.
Okay. Let's separate this portion, and this is this portion. This is called discount factor. So if I can somehow calculate a discount factor, I can simply multiply the discount factor with my future value, and that will give my present value. Are you clear?
No, sir.
1 divided by 1 plus R raised to the power T is my discount factor. Do you agree with that?
Yes.
And whole of this thing, this discount factor, is actually being multiplied by future value. Do you agree with that?
Yes.
So if I somehow can calculate the value of discount factor, whatever it comes, I will multiply it by future value. It will give me present value.
Yes.
Agreed? Now look
Yes,
at the
agreed.
discount factor. Discount factor has got only two unknowns. One is R, another is T. Agreed?
Sir, I cannot hear you properly.
I am sorry. I am saying that can you see the discount factor?
Yes, sir, I can see this.
Okay, this discount factor has got only two unknowns, R and T. Is it okay?
Yes,
No, one doesn't change. One is one. R is unknown, T is unknown.
yes,
So if I put different values of R and T here, and I can calculate all the values, like I can make a matrix like this. On one side, I put the number of years. On the other side, I put the discount rate. And I put these two values, this year and this rate, into this formula. And whatever is the answer, I write it here. Got it? So I can
okay,
create a whole table.
yes,
So he has created a whole table. This table is called table of NPV discount factors. You can find it in any,
okay,
it is in any stat or accounting book, you will find NPV discount factor chart. This is for those people who can't calculate, who are, where, it is difficult for them to calculate. So they consult this table and simply multiply it with their present value, with their future value, and they get the present value. So
okay,
if the percentage is 10%, after 1 year, that money is coming. So present value will be equal to 1 lakh multiplied by 0.9091, and this exactly comes out to be 90,910 rupees. So the present worth of 1 lakh rupees which are coming after 1 year is presently 90,910 rupees. Got it?
okay,
If
yes, sir,
if I was to get it after 2 years, then it would be multiplied by 0.8264, 82,640 rupees. If I have to
okay.
get it after 25 years, the present worth
This is start decreasing.
9,230 rupees.
Right.
Have you gotten it? It is very simple.
Yeah, yes, yes.
If you have any confusion, you must clarify that, because naturally, as in PMP exam, there will be questions. Rather, it is more analysis type paper. So it is more likely that you will have a bit difficult questions about these things.
So far, I'm clear. Well, I'll start studying and preparing for it. Then I might come through some difficulties, so I might be consulting with you.
Okay,
So far, I'm all good.
right. So what if I calculate the present values of all the 4 projects which we had discussed earlier? First of all, let's see project 1. The 100,000 rupees I was investing, first year, second year, third year, fourth year, fifth year. So we will convert every amount in this cash flow into the present value, because these are all not the present value. These are the future values. You see that? This 10,000 is after
Yes.
1 year, this 10,000 is after 2 years, this 10,000
Yes.
after 3 years. So I have to convert everything into the present value at the rate of 10%. What is the present value of 100,000 rupees I am investing? What is the present value of
Are you
100?
asking me?
I am asking what is the present value of 100,000 rupees
Oh,
I am investing today?
so the present value is 9091.
जी?
9091.
नहीं, आपने देखे, this was a tricky question. आपने गौर नहीं किया. मैं ये कह रहा हूँ आज आप 1 लाख रुपया लगा रहे हैं, उस 1 लाख रुपए
ठीक है,
जो कि आपकी जेब में पड़े हुए हैं, उनकी क्या वैल्यू है?
तो आज 1 लाख लगा रहे हैं, उसकी तो आज 1 लाख की है।
एग्जैक्टली यही मेरा पॉइंट है।
जी
जो आज का 1 लाख है वो तो 1 ही लाख है ना।
जी।
तो बेशक आप फॉर्मूले में अप्लाई करके देख दें, आप इधर लिखिए 1 लाख डिवाइडेड बाय 1 + r, 1.1 से डिवाइड करें, लेकिन 1.1 रेज टू द पावर क्या है, नंबर ऑफ ईयर्स कितने हैं?
जीरो, तो
जीरो पे
जीरो,
क्या जवाब आएगा?
तो जीरो कर देगा सर,
वही
जीरो
रहेगा
कर
ना।
देगा सब।
एग्जैक्टली। So your present money remains the present money. This is the future money. 10,000, if the factor of 0.9091 discount factor is applied to it, it will become 9,091. This 10,000 will become 8,264. This 10,000 will become 7,513. This 20,000 after 4 years, it will become today's 13,660. And 1 lakh rupees, which is coming in the 5th year, that is only worth 62,090 rupees. And if I get, these are all the present values, if I add them all up, my net present value is only 680. Got it?
Okay. Yes,
So
sir.
you see, uh, we were talking about a net profit of 50,000, which is actually worth only 618 rupees. Net,
Sir, can you explain me this word net present value?
net,
I can understand what is net profit. I can understand what is present value.
sum up all the present values.
No, what is net present?
Okay, sum up.
Okay.
You see how the net profit was calculated. Just hold on. You added all the cash flows like this. You added everything, na?
Yes, yes,
And you got this thing, right?
yes.
Now what I did is I converted all these amounts into present money, present value. So these are all the present values, right?
Okay.
If you add them all up, it will give you net present value.
Okay.
So net present value actually shows the worth of the money today. So the 50,000 profit which we are very happy about is only worth 618 rupees today. Got it?
Okay. Yes, sir.
So you can also create the same kind of net present value for all the projects or all the options. And this is a table summarizing everything. So here I have calculated for you all the options. NPV is calculated. Project 1 is 600 and something. Project 2 NPV is minus 1,79,750 rupees 51 paise. This is the worst example. Project 2 is the worst example. Why? Because it has so much investment and the worth of the money which is coming late is very less. The worth of the money which is coming early is very, very much. You see, 10,000 rupees coming uh, after 1 year is worth 9,000. After 2 years, it's just worth 8,000. And after 3 years, 7,500. So similarly, uh, we would love to have that project which is giving me high cash flows in the beginning. High cash flows in the beginning. So
In the beginning, yes.
looking at this result of this, we see the best project is project 4. From the NPV point of view, the best project is project 4. And now we are capable of comparing project 1 and project 3, which when we compared earlier was no different from each other. In net profit, in ROI, they were same. This is the first time it is apparently shown that project 3 is much better than project 1 because it is net worth of present value is much more than project 1.
Okay.
Right. So this is the NPV. Okay. Last but not the least, rather the most important, is the internal rate of return. Just listen to me very carefully. You see, in the NPV, we saw the values can go negative also, right? Project 2's value went into minus. So therefore, we know that NPV can be positive or negative. Agreed?
Agreed.
So can the NPV be 0?
Yes.
Definitely. Now the interesting part is
Yes.
we were working on a percentage given to us by the bank. That percentage was good enough for comparison, but we are not a bank. Why are we following the interest rate and discount rate of the banks? We are going to start our own business, and my business will have its own capability, its own capacity. So my business should earn more than bank because banks also invest their money in businesses, and I am a business. Businesses earn more than banks. Therefore, banks are investing in businesses. So if I am talking about my business, why should I restrict myself with a 10%? Why should it not be 30 or 40%? So I don't know what is the internal strength of my project or my option. So, but I know one thing, that there could be a percentage at which my NPV will become 0. And what does that mean? That this is the break-even point. At that percentage, I would have equaled my cost and benefit from the present value point of view. So if somehow I can find that percent, that is the percent from where onwards I will be making profits. So this is called internal rate of return. I do not use the bank percentage as discount rate. I will try to guess a percentage where my value of NPV becomes exactly 0, and that percentage is called internal rate of return. And if I am comparing it with more than one options, whichever gives me the highest internal rate of return is the best project. बात समझ आई? जनाब
समझी ये है कि आप जिस प्रोजेक्ट का भी हमारा आरओआई सबसे ज्यादा होगा वो हमारा बेस्ट प्रोजेक्ट के जुमरे में आके काउंट होगा।
नहीं, आरओआई तो बहुत गड़बड़,
हमारा
आरओआई तो अच्छी चीज ही नहीं है। आरओआई तो कच्चा सा मेथड है। ये जो आईआरआर है ये एनपीवी से भी अच्छा है। NPV was good enough because it was at least telling me the present value of money, my money, from the point of view of bank. But IRR is telling me the internal strength of my business, and it is showing me what is the potential of my business to earn money, right? So internal rate of
Okay.
return is a
Okay. Right.
best method, and to calculate internal rate of return, it is a little cumbersome, it is a little difficult, but internal rate of return is calculated by guessing a percentage at which NPV will become zero. So I try different percentages. I try 5%, 20%, 10%, 7%, and I keep closing it near to zero. The a good method of doing all this is, I'll show you. You draw this kind of a chart. Can you see the chart?
So chart. Yeah. Now
Graph.
I can see the chart.
Okay. So this is the percentage from we have to catch a percentage. We don't know what is my IRR. So from zero onwards, this is a percentage. And here, if my value comes in positive, I will write it 2, 4, 6, 8. I will place it on over this line. And if my value is negative, I place it under my line. So for example, at 8%, it came out to be 8,000 plus. And at minus 6,000, it came out, at 12%, it came out to be minus 6,000. So if I have two values, one positive and one negative, I can join them by a straight line and try to guess this percentage. This will be my IRR. It is very near to IRR. So you have to do the complete calculation of NPV at 8% and at 12%. And whatever is the result, you have to draw a straight line. Wherever that line crosses the percentage line, that is my IRR. Confused तो नहीं हो गया?
जी सर काफी लॉस हो गया मैं आपको लेके लॉस हो
नहीं समझ आ रहा?
गया जी सर आइए सर समझ में नहीं आ रहा और सर तो आपके साथ था इसके पीछे जितना भी है वो सब आई एम बिजी ऑन
नहीं
बट ये
एनपीवी क्लियर है?
जी सर बिल्कुल क्लियर है
बिल्कुल क्लियर है ना? ये मैं एनपीवी से ही आगे कहानी लेके
जी
जा रहा हूँ. मैं ये कह रहा हूँ कि एनपीवी में जो एक परसेंटेज इस्तेमाल करते थे, वो परसेंटेज तो बैंक ने दी हुई थी, डिस्काउंट रेट.
ठीक है वो 10% बिल्कुल सही है
वो हम नहीं इस्तेमाल करना चाहते, क्योंकि हम ये जानना चाह रहे हैं कि हमारे
ठीक है तो हम ये देखते हैं आईआरआर में कि हमारे अपने इंटरनल बिजनेस स्ट्रेंथ कितनी है कि हम उससे कितना और ज्यादा मुनाफा कमा सकते हैं ठीक है ना कि हम उसको अकाउंट में ले रहे हैं ठीक है
तो आई विल हैव टू गेस दैट
आपके साथ
I will have to guess that percentage at which my NPV will become zero, exactly zero.
ठीक है ठीक है
तो guess
तो
करने का ये
ठीक
तरीका है
है
जी.
मतलब जो मेरा गैस होगा वो वाइल्ड गैस होगा
हाँ, आप वाइल्ड गेस ले लें, आपसे 5% के ऊपर कैलकुलेट कर लें, 20% पे कैलकुलेट कर लें. So when you get a positive value and a negative value, you put it on this graph and connect those two lines. Those 2 points को आप कनेक्ट कर लें. वो जहां से क्रॉस करेगा ना परसेंटेज की लाइन को, वो जगह होगी आपका आईआरआर. और मैं अभी जाते जाते आपको एक और भी चीज करके दिखा देता हूं. ये बात याद रहेगी ना आपको?
इंटरसेट करेगा दैट इज द पॉइंट
एग्जैक्टली. उसको आप वैल्यू डाल के भी देख सकते हैं और वो आपका निकल भी आएगा. ओके, मैं एक बड़ी इंटरेस्टिंग इस पे एक्सेल पे दिखाता हूं. ओके, जस्ट अ मिनट. आपको एक्सेल की शीट नजर आ रही है?
सर अभी तो नहीं आ रही।
अच्छा, अभी आएगी। आई कि नहीं? आगे जी। ओके, ये आपके सामने मैंने दो प्रोजेक्ट्स लिखे हुए हैं, थोड़ा आपको समझना पड़ेगा। ये है जी इन्वेस्टमेंट। इन्वेस्टमेंट है जी, 1000 इन्वेस्टमेंट किया है, एक साल बाद 100 आ रहा है, फिर 2 साल बाद 300 आ रहा है, तीसरे साल बाद 400 आ रहा है, चौथे साल बाद 700 आ रहा है। अच्छा, इसका नेट प्रॉफिट 500 बना। ठीक है,
ठीक है,
मैंने अगर इन सब चीजों को
ठीक
ऐड
है
कर
सर।
दिया, यहां से लेकर यहां तक अगर मैं चीजें ऐड करूंगा तो 500 आ जाएगा। ये मेरा ईयरली प्रॉफिट है, इसको मैंने
500 आ जाएगा।
4 साल से डिवाइड कर दिया। आरओआई मेरा निकल आया 1000
ठीक है,
डिवाइडेड बाय 125, 12.5%। ये आरओआई तक निकल
ठीक
आया।
है,
अच्छा, अब आप देखिए, ये मेरा एनपीवी है, ये मैंने एनपीवी निकाला। ठीक है जी,
ठीक है,
ये मेरे एनपीवी की वैल्यू, सॉरी एनपीवी को आप छोड़ें, हम आईआरआर पे चलते हैं। नो, आईआरआर को दिखाने का एक बड़ा मजेदार तरीका है। ये आप देख रहे हैं फार्मूला लिखा हुआ?
जी जी,
फार्मूला बड़ा सिंपल है। आपने क्या करना है, लिखना है इक्वल टू आईआरआर, और ब्रैकेट के अंदर आपने ये रेंज दे देनी है यहां से यहां तक। तो वो ज्यादा गैस
जी
वर्क
सर,
करने की जरूरत ही नहीं पड़ेगी, वो खुद ही बता देगा कि आपके प्रोजेक्ट का आईआरआर ये है। ये कंप्यूटर एक्सेल पे निकल आएगा।
14.1। ठीक है,
और ये एक दूसरा प्रोजेक्ट है।
जी सर, ये एक्सेल का अपना बिल्डिंग फॉर्मूला होगा।
हाँ जी, ये दूसरा फार्मूला, ये दूसरा दूसरा प्रोजेक्ट है, इसका निकल रहा है 20.8। तो इसका मतलब है दोनों को कंपेयर करें, जिसका ज्यादा होगा वो विनर है। तो इन ऑर्डर ऑफ प्रायोरिटी,
बिल्कुल सर।
प्रॉफिट पहला मेथड था जो सबसे घटिया था। उसके बाद पे बैक पीरियड है, उसकी अपनी है अगर आपने लोन पे करना है। उसके बाद आपका आरओआई था। आरओआई जनरली कंपनीज में इस्तेमाल होता है, लेकिन वो इतना एक्यूरेट मेथड नहीं है। एनपीवी एक बहुत
ठीक है,
अच्छा मेथड है, वो आपको प्रेजेंट वैल्यू ऑफ मनी बताता है। और आईआरआर सबसे एक्सीलेंट मेथड है कि वो आपको इंटरनल रेट ऑफ रिटर्न बताता है। तो जनाब, कॉस्ट बेनिफिट एनालिसिस आप जब भी करेंगे तो यही वो तरीके हैं जिनसे आपका कॉस्ट बेनिफिट एनालिसिस होता है।
ठीक है सर।
अच्छा जी, अभी ये
चाहिए सर।
मैंने आपको ये कहानी तो सारी सुना दी, और इसको हम देख लेते हैं कि हमारी आखिरी स्लाइडें क्या कहती हैं। ये सिर्फ मैं इसलिए किया कि आपको एक रिफ्रेश हो जाए, अच्छी तरह से क्लियर हो जाए। ये जनाब वो,
सर आपने
जी जी,
450 हो गए। जस्ट स्मॉल रिमाइंडर, आपको जल्दी जाना था, 450 हो गए,
हाँ
तो
जी बिल्कुल बिल्कुल,
आप अपनी कन्वीनियंस देख सकते हैं।
हाँ जी, मैं बस निकलता हूँ। ये आप देख रहे हैं ना, ये पे बैक पीरियड है, आरओआई है, आईआरआर है। इसने सारी चीजें नहीं दिखाई हुई, ना ही सारी चीजें बताई हुई हैं, लेकिन
जी सर, बिल्कुल।
ये एनपीवी भी इसने डिफाइन किया हुआ है। लेकिन जिस तरह मैंने आपको डिफाइन कर दिया, उससे तो आपका मसला हल हो जाएगा।
बिल्कुल सर।
आखिर में हम असेंबल करते हैं बिजनेस केस को। ये आखिरी एक दो स्लाइडें हैं। नॉट ऑल बिजनेस प्रॉब्लम्स आर अपॉर्चुनिटीज, require a formal business case. Executives in an organization may approve programs and projects based on competitive pressure, government mandate, and executive inclination. In those cases, a project charter to initiate a project or program is sufficient. वो कहते हैं जी, ऐसा भी हो सकता है कि आप डायरेक्टली चार्टर निकाल दें, लेकिन इन सम केसेस देयर विल बी अ रिक्वायरमेंट फॉर अ बिजनेस केस, तो फिर बिजनेस केस बनाना पड़ेगा। इन मोस्ट केसेस, मोस्ट इंस्टांसेस, analysis performed in the business case helps organizations select the best programs and projects to meet the needs of the business. Business cases help organizations scrutinize programs and projects in a consistent manner. When this process is embraced, organizations will consistently take better decisions. तो ये है जी मकसद बिजनेस केस बनाने का। और बिजनेस केस में क्या एड्रेस करना है? यू हैव टू एड्रेस द प्रॉब्लम एंड अपॉर्चुनिटीज, एनालिसिस ऑफ द सिचुएशन, योर रिकमेंडेशंस, योर एवेल्युएशन, ये वो 3-4 आइटम्स हैं जो बिजनेस केस में हमने डिफाइन करने होते हैं। और अल्टीमेटली वैल्यू ऑफ द बिजनेस केस जो है, व्हेन अ बिजनेस केस इज क्रिएटेड इट बिकम्स अ वैल्यूड इनपुट टू प्रोजेक्ट इनिशिएशन। इनिशिएशन का इनपुट है ये, आपको याद है ना, चार्टर जब बनता है तो बिजनेस केस इज अ इनपुट। Project team with a concise and comprehensive view of the business need and approved solution to that need. More than a simple input, business case is a living document that is constantly referenced throughout a program or project. It may be necessary to review and update a business case based on what is discovered as a program or project progresses over time. तो बिजनेस केस लिविंग डॉक्यूमेंट है, साथ साथ उसको रिवाइव आप करते रहेंगे। When a business case is inadequate or non-existent, product scope may be unclear or poorly defined. आपने देखा प्रोडक्ट का स्कोप ही सही डिफाइन नहीं हो सकेगा। This in turn often leads to scope creep, which results in rework, cost overrun, and project delays. A business case can help to address the possible risks of having to cancel a project due to loss of sponsor or stakeholder support, cost exceeding the perceived benefit and changes to the business. तो आप ये गौर करें, बिजनेस केस जड़ है, इसकी वजह से इतनी सारी प्रॉब्लम्स खड़ी हो सकती हैं। तो बिजनेस केस जितना अच्छा होगा उतने आपके प्रोजेक्ट के अंदर सारे काम बेहतर तरीके के साथ परफॉर्म हो सके। So that's that जी, ends our today's lecture and the need assessment chapter also. So tomorrow we will be moving on to the next chapter, which is business analysis planning. Right जी?
जी सर।
I hope कि आज बात समझ आई होगी।
नहीं सर, और इंशाल्लाह हम कल सेशन यही अपना 3 से 5 रखेंगे, राइट सर?
जी जी बिल्कुल बिल्कुल, कल इंशाल्लाह 3 बजे।
ठीक है सर।
ओके सर, टेक केयर।
राइट सर।